All right. Good morning, everyone. Tony Laporta here with TonyLaporta.com. Anyhow, well, there they are, right there. Bonds trading on their overnight highs, intraday highs, however you want to put it. Stocks trading on their intraday highs. This is easy. This is easy. I got out of my short bonds last night. Happy as can be. Made the decision that I'm not trading them today or tomorrow. Made the decision because I felt like I wrote in my commentary last night that the indices felt tired. And I sat there last night, I watched them open a little bit. I'm getting ready to watch an All-Star game, World Series game, and all of a sudden the spoos break 10 handles. And it's like, wow, nice call there, TLP, but of course, and here they come roaring back again. So I'm in the camp where I've had a good run. Obviously, the buys that on that inside range FUBAR Mr. Sneaky trade, those the buys in the wheat were very good. I've taken 60% of my profits, and still I have a few more to sell. But that was a nice little indicator. Those FUBAR Mr. Sneakies are really good. So that's all good. I'm not getting involved in the bonds. I'm not getting involved in the S&Ps. I think the S&Ps could be a chop fest today. So use the pivot points. Those pivot points are fantastic. Buy the lows, sell the highs. I think today's a chop fest. Buy them when they look their worst, sell them when they look their best. I'm not going to get involved. I want to see what this data is like tomorrow. The bond market is telling me we're going to get bad data. The stock market is telling me we're going to get good data. The treasury notes are telling me we're going to get bad data. If it's true that I'm now, looking at the notes over the bonds, the notes are telling me we need to go lower, and the bonds are telling me we need to go higher. So I still think by the end of the year, we will see this bond market trade through the 150 handle. Getting through it, we have to get through 152 even though first. So I'm gonna give the markets a little bit of a rest. We had a real nice chat this morning in the trade room about the gold market and how when the stock market in 2008 was going down, so was the gold market. And it's like, that doesn't make sense, does it? But it did. The gold market had a 35% correction from March 08 till October 08. So if you don't believe me, go look it up on a chart. You'll go, well, wait a minute. That's when the stock market was coming off real hard. Why did the gold market come off too? So that was something we discussed in the trade room this morning. Get in the trade room. Come on in if you can. So, I talk every morning pre-market, and then I talk for about an hour after the market's closed. And after the market's open, and I opened up the trade room strictly as a perk to my client base. So there's no extra addition to come in the morning. And so that's it. So I'm going to watch the markets for a couple of days. I've had a good little run. I'm still long wheat and I'm still long corn. So those are my only positions. This is Tony Laporta with TonyLaporta.com signing off. You can find me at www.TonyLaporta.com. Cheers.